Welcome to The Explainer. Today, we're diving into a company that is, for a lot of people, the absolute holy grail of retail. We are, of course, talking about Costco. It boasts this incredible cult-like following, generates just massive amounts of revenue, and has a proven, decades-long history of creating serious wealth for its long-term holders. But, when a company reaches this level of legendary status, the expectations become absolutely monumental. So today we're going to break down the real price of this retail perfection.
Okay, let's dive into this with a clear roadmap. We're going to start by unraveling the valuation paradox, then we'll look at the bull case to see why Wall Street still loves it, followed by the bear case to expose the actual risks. After that, we'll size up the market psychology and technicals, and then wrap the whole thing up with our final verdict.
All right, so we've got to start with the massive elephant in the room, 48. That is Costco's current price-to-earnings, or PE ratio. Let's be totally honest with each other here. That is a valuation you would normally expect to see attached to some high-flying Silicon Valley tech stock. You don't expect it from a brick-and-mortar retailer famous for bulk toilet paper and, the eternal $1.50 hot dog combo. It is an incredibly high premium. Which brings us to the literal million-dollar question that is completely splitting the financial community right now. Is Costco's stock a bubble that's finally ready to pop under the massive weight of its own expectations, or is it a brilliant long-term hold that deserves absolutely every penny of that premium? Well, let's look at the data. Section 1. The bull case. Why Wall Street still loves it. First up, we've got to give credit where credit is profoundly due. The bulls out there aren't just buying a popular brand name, they are buying an absolute operational machine. And it's resting on 4 undeniable pillars: a massive revenue engine, a continuous growth story, an incredibly unique product mode, and deep, deep institutional confidence. Let's break down exactly what these look like in practice. Just think about the sheer, mind-boggling scale of their volume. In their most recent quarter, revenue hit $70.53 billion, beating expectations. Year-to-date, net sales are sitting at an astonishing $273.55 billion. I mean, in a macroeconomic environment where consumers are heavily pinching pennies, Costco is proving it can still move massive, massive amounts of inventory. Furthermore, they definitely aren't just resting on their laurels. The number 931 represents their current global warehouse count, and they are actively filling this footprint with a massive $4.2 billion capital expenditure. They're building out to capture even more market share, totally proving that their physical growth story is far from over. Then you've got the secret sauce, Kirkland's Signature. Their private label isn't just some cheap generic alternative. It's often a premium product sold at a really steep discount. And this builds fierce, unshakable customer loyalty. When you combine the absolute powerhouse that is Kirkland with Costco's new wellness partnerships, you're seeing a company actively diversifying its revenue streams way beyond just traditional groceries. Finally, look at who's actually holding the bag. And I mean that in a good way. Institutional backing is massive here, sitting at nearly 70% ownership. We recently saw heavy hitters like Border Denton and Associates actually increase their stake by nearly 6%. When the smart money is buying in this heavily, everyday investors really need to pay very close attention to the underlying strength of the growth story. Section 2. The bear case. The risks you can't ignore. Okay, let's pump the brakes on the enthusiasm just a bit. We need to be totally objective here. The bears are pointing to 4 major operational and market risks that are threatening this premium pricing right now: the valuation trap, the squeezing of profit margins, looming price wars, and a recent slowdown in their absolute most important metric, membership growth. Now, what's really interesting here is how razor-thin the margin for error is. Remember that 48 PE ratio? It means you're paying $48 for every single dollar of earnings. So when Costco recently missed their earnings per share expectations, coming in at $4.93 against an expected $4.94, it highlighted a major vulnerability. Missing by even a single penny at this valuation actively punishes the stock. Add to that the harsh reality of margin compression. Retail is already a famously low-margin game, right? Now costs for labor, logistics, and supply chains are just rising across the board. While Costco could, theoretically, just raise their membership fees to combat these costs, doing so risks alienating their fiercely value-conscious customer base. And that's especially risky right now when membership growth is showing somewhat tepid, moderating numbers. It is a very, very delicate balancing act. Plus, they aren't operating in a vacuum. Rivals like Kroger are aggressively cutting prices, effectively declaring a full-on price war. Yes, Costco certainly has the scale to compete, but a race to the bottom inevitably hurts everyone's profit margins. It's exactly the kind of scenario that investors absolutely hate, because it erodes profitability across the entire board. Section 3.
Market psychology and technicals, sizing up the price action.
So you've got this pristine operational machine, but it's facing steep valuation risks and mounting external pressures. How is the market actually digesting this highly tense bull versus bear debate? Well, the stock recently closed at $961.10, which is down 12% from its 52-week high of $1,096. This 12% rollover is a super clear indicator that the market is actively pricing in the exact risks we just discussed. New buyers are clearly hesitant to step in at peak levels. However, it is really important to note that the technical floor seems to be holding quite steadily right around that $950 mark.
These dueling price targets paint a perfect picture of Wall Street's own internal division. You've got UBS sticking their necks way out with a highly bullish target of $1,275, projecting massive continued upside. But on the flip side, Citi is much more cautious, setting a target of just $1,020. This stark contrast perfectly mirrors the conflict we're seeing between optimistic growth projections and the harsh reality of current valuations. The psychological takeaway here is quite clear. The broader market absolutely loves the company, but it really doesn't love the current entry point. Investors are basically waiting on the sidelines for a pending catalyst. Are we going to get a surprise interest rate cut that boosts growth stocks and justifies the high multiple? Or are we going to see a sudden consumer spending slowdown that completely crushes retail? The tension is honestly palpable.
Section 4. The final verdict. Actionable takeaways.
So, the crucial point is, how do you actually synthesize all this conflicting data based on your own specific time horizon? Well, for the long-term investor looking out 5 years or more, Costco remains a pristine, well-managed fortress and the true compounder. It offers a super reliable $1.47 dividend. If you hold it, you probably just keep holding it. And if you want in, dollar cost averaging around that $950 dip makes a lot of sense. The company really just needs to maintain roughly 10% sales growth for its earnings to eventually catch up to its valuation. But for the short-term trader looking at the next 6 months, you absolutely need to be cautious. At these levels, the risk-to-reward ratio is balanced at best, with significant downside if they happen to miss another earnings expectation. Ultimately, even fortresses are incredibly expensive to maintain. Keep a very close eye on upcoming consumer spending data, and those vital membership numbers, they're going to tell you the real story in the months ahead. That wraps up our deep dive into Costco's valuation paradox. But I want to leave you with this one final thought to ponder. Are you buying Costco at these premium levels, or are you waiting patiently for a bigger dip? Thanks for joining this explainer, and keep learning.